Hello everyone, welcome back to Upside Down Data. Today I want to talk about some potential warning signs that Bitcoin might be showing us right now. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So I want to start our discussion about some things that I see right now as being concerning about what Bitcoin's price action is doing. I want to start with the TCI, the Trend Confidence Indicator. If you've been following the channel, you're quite familiar with this indicator at this time, but in brief, this indicator is supposed to give us an idea of how confident we can be in the current trend. If the TCI is above 0 and we're in an uptrend, and especially if it's high above 0, we can be relatively confident in that uptrend continuing. If you're in a downtrend and the TCI is below 0, you can be relatively confident in that downtrend continuing. And then if there's divergence, if you're in a downtrend, but then the TCI flips green, you can be, it's very plausible that the reverse or the trend will be reversing, like what we saw here in the summer. And on the flip side, if you're in an uptrend and the TCI flips red, that means that that uptrend might be nearing its end, and that's what we saw here back in the spring of 21. Now, something I've been talking about a lot on the channel is that the TCI has been bullish on Bitcoin for quite a while. In fact, ever since this kind of second bottom we had here in early February, the TCI flipped green and has been green ever since. And I think it's been vindicated to do that. We have realized a good amount of upside potential since then, right? We've moved up quite notably in price from these kind of low to mid 30Ks up into the upper 40Ks at this top here. But now a concerning thing that we're seeing is that for the first time in over 2 months, the TCI has closed red. Right, we have not seen a red close in the TCI since early February. We just got our first one here. Even though we had bounced off the level for several times, we've now closed red. Now, is this concerning? Why am I concerned? Well, for the reason that oftentimes when you see a close in red, there's continuation. Really, if we look back in kind of recent history, there's only one case here towards the top in November, where we got a close in red that quickly rebounded. So if we get a quick rebound from here, I'm not going to be especially concerned. But more often than not, some follow through happens. And that's why I'm concerned, at least in the short term. You can see we closed red here before this fall, and we fell down further in recent history. You know, we closed red here, down here, and we had more continuation to the downside. Closed red here, had more continuation to the downside. And then all the way down through here, you know, we close red here, more continuation to the downside, or to the downside here. Close red up here, more continuation to the downside. Close red here, you know, plenty of continuation down to the downside. In fact, if we flip to a longer term perspective on the TCI, I usually zoom it in just so you can see a little bit better to more recent price action, but we can look back at the entire history of Bitcoin as the TCI interprets it. And again, you see an awful lot of continuation to the downside, that when the TCI closes red, oftentimes there are these moves down to the downside, these notable moves. There are a few times where we bounce. You know, there are a few times where we close barely in the red and we move back up, and that's obviously what we hope would happen right now. Or most people, I think, would hope that's what happens right now. But oftentimes there's this continuation, and that's why it's concerning to see us flip to the other side. Now, again, being this close down in the red is not especially concerning yet, right? We haven't seen the continuation, but if we start closing consecutive days down in the red, then I'd see it be more likely that we're going to see one of these pullbacks in the market rather than a quick reversal. When we see these little blips, it's usually just 1 or 2 days we're spending down here. It's not very much time. So that's what I'm going to be looking at in the next week. Can we get back into the green zone? That will alleviate some of my concern. If we don't, then I would expect downside to continue. And so that's what I'm seeing with the TCI, just as we've seen that in the past. Now, again, one of the nice things about the TCI is that it is a machine learning based model that is basically making these estimates, but we can actually probe it to ask it, what are you looking at? What is the specific price level that you're seeing as being this cutoff between bullishness and bearishness? And right now it's watching 42,681. So as I'm recording this, we're trading at around the 42K level. We'd like to see a move above 42.6, preferably above 43K at the very least, before we can start feeling like maybe this is just a blip and we're able to maintain this bullish kind of bearing in the market we start really closing consecutive days in the red, I'd be concerned and think that continuation of the downside is very plausible. Gonna have to wait and see, but that's something I'm watching that is concerning. Now that's kind of more of a short-term perspective, because again, you can see these closes down in the red that quickly reverse, and so this isn't necessarily saying that we're doomed to break down below 30K or anything like that. This is just to say that in the kind of the shorter term, I'm concerned. A model that gives me a little bit more concern in a more macro perspective is actually the MBI, the Momentum Bias Indicator. Now, this is another machine learning based model that we have here at the channel that is different from the TCI. So even though I'm using this kind of green-red color scheme here, what this model is capturing is very different from the TCI. So the MBI is trying to capture basically what's the predominant momentum in the market in a given moment. Is it to the upside or to the downside? So 0 is kind of being this cutoff line. 0 is actually the average amount of momentum that Bitcoin has had in it throughout its life. So obviously that's positive, given that Bitcoin has moved up over time. There's positive momentum that's been dominant overall. So that's the average. That's 0. And this is a Z-score. So basically, as you move up, 1 is 1 standard deviation above the mean. -1 is 1 standard deviation below the mean. And so what you can see is that in these kind of big moves to the upside, these bull markets, you spend a lot more time in the green than in the red. Really, you're spending a lot of time kind of outperforming on momentum. There's a lot of positive momentum that's dominating and outweighing the negative momentum. So even every time we kind of have these dips, it quickly gets reversed, and then the dominant positive momentum continues, and you move up into these blow-off tops. And that's what we've seen throughout Bitcoin's past. And then again here, spending all this time up in the green and then coming down and crashing into the red right around here before we go into this big crash that we had in the summer of 21. And what you'll notice is that bull market behavior tends to begin with this kind of equal oscillation around 0. I've noted this in the past, kind of building into these parabolic moves, this kind of with the March 2020 crash being the kind of exception here, kind of moving this equal oscillation around 0 into this big parabolic top. Bear market behavior tends to be dominated or described by spending a lot of time in the red, and then whenever you poke your head up into the green, quickly getting rejected back down to the red. We saw that here going into the bear market before the 2016-2017 bull run. Saw that again here in the 2018 bear market, moving down to the red, peeking our head up into the green, then going back into the red before this big capitulation. And what I'm starting to get concerned about is that the way that the MBI is looking right now seems quite a bit like what we saw back here in 2018, right? That we've spending a lot of time down in the red off of the all-time high. We've peeked our head up to the green, and we've been rejected by 0. We've moved back down to the red. That's what we saw here, right? That's what we saw here in 2018. These moves to the upside quickly get rejected. We're just peeking our heads up, getting rejected back down to the downside. That's concerning, because this looks a heck of a lot more like bear market behavior than bull market behavior right now. We didn't really get to any kind of notable amount of upside bias, upside momentum bias here. We didn't get to the same level we got here. We didn't get anywhere near the same level we got here. We've been rejected. Now, of course, one thing that you could argue is, oh, well, maybe we're just going to do something like this. And that is, of course, totally possible. Maybe it is the case that we're going to be able to put in a reversal. Anything can happen. But if I just had to look at this and say, what does it look more like? This looks more like the 2018 bear market than really anything else I'm seeing on this chart. Now, of course, you should make your own decisions. Interpret this data as you will. Maybe you see this behavior acting like something different that you're seeing on here. But that's just my interpretation. So that's another warning sign I'm seeing in this current price action. So even though we are in a technical uptrend, that happened back here as well, where we're in a technical uptrend that didn't stop us from moving back down to the downside. So 2 other things I want to talk about that as being other warning signs I'm seeing. So the first one has to do with the 20-week moving average. This is a moving average that a lot of people look at as being very important between kind of dividing bull and bear markets, or bullish and bearish times in the market. And the thing that's concerning is that, a couple weeks ago, one thing that was really positive was that we actually blew past the 20-week and closed above it. And we had a second close above it last week, but now we've lost it. we've fallen back below the 20-week. Now, of course, we could regain it, and that could all be fine, but it's certainly not great to be starting to put in weekly closes below the 20-week moving average, because the reason for that is that when you look at what's happened in the past when we start doing that, you know, here's where we did it the last time. Look at, we know what happened after that. But also, if you go back into these past kind of bearish times, when we break below the 20-week, like we did, you know, up here, and we come back to retest it, when we fail to reclaim it, oftentimes there's more downside. And then again, coming back to 2018 being a time where I think there's a lot of similarity in some ways that's forming, potentially more similar to like this kind of price action, what we're seeing right now. You know, a technical uptrend more or less, you know, putting in a low here and putting in a higher lows up here. But again, closing above, falling below, more downside followed. And then again, we can go back over here, able to reclaim it for a while, close below, downside follows. And so that's something that I'm seeing that's concerning, right? That this looks an awful lot like a failed retest of the 20-week right now. Now again, not to say that we can't move back up here, and if we can, that could change things. But if we start, especially if we close next week below the 20-week, that gets a lot more concerning. And the final thing that's concerning about this is if we go and look at the short-term holder realized price, some on-chain data here, essentially what this is capturing is short-term holders' cost basis as a group. So kind of on average, what's the cost basis of short-term holders? And what's important about this metric is that often it'll act as support during bull markets. You see that, for example, in the run in 2016, 2017. But as resistance in bear markets, we see that happening, if I zoom in here, in the 2018 bear market. Got rejected off of here twice. Rejected here, almost got back up to it here. And then downside followed every single time we had one of those failed retests. And what's concerning about that is that it again looks like we might have had a failed retest of the short-term holder cost basis. Came back up, we tested it, and now we're moving back down. Now again, it's not to say that we can't reclaim it. You know, there's been times in the past where we moved below it and have reclaimed it. But the more time we spend down here, kind of the less optimistic I am that we can just immediately go back up and reclaim it. You know, this is not bull market behavior. Bull market behavior is holding it as support. It's not getting rejected. Now, of course, you know, there's times like this where we can get above, we have to go back down, then we can get back above, then start moving back up. And so even if this is a failed retest, not to say that we have to spend years, you know, going into a bear market before we can move back up. Certainly not. But if we're just thinking about what this looks like, in my opinion, this looks bearish. This is bearish price action. There's no real way to kind of get around it. There's no way to sugarcoat it to some degree. That this is not a point for the bulls. That you can't look at this and then say that this is actually secretly way more bullish than it is bearish, in my opinion. That what we're seeing across these indicators with this more recent move down with Bitcoin is bearish TCI, bearish MBI, bearish move below the 20-week moving average, and a bearish rejection off of the short-term holder realized price. And again, this is a thing that I didn't think had to happen, right? I had made a video recently where I thought that it was very plausible we could end up moving back up above these ranges. You know, the TCI was still, had been bullish until just today. That's why I had that bullish bias. That's why I was holding on, that Bitcoin hadn't shown me that definitive end of this recent uptrend we've been in since the lows back in January. But now it's starting to flash warning signs, and now it's starting to seem like a move back down, even potentially into the 30Ks, is not impossible by any stretch of the imagination. It's becoming more and more plausible with this recent price action we're seeing, and we shouldn't be blind to that, right? We shouldn't be putting on our blinders and just hoping for the best, because certainly we're hoping for the best. I'm hoping for the best, but we need to look at the data and see what it's telling us. And so what I'm seeing now is that at best what I think we can hope for is continued consolidation in this range. Maybe we have to go back into the 30Ks and then bounce back up. Maybe it's just going back into that range before we can move back to the upside. Maybe it's too early for us to be able to flip, you know, 40K into the range. We'll have to wait and see what happens. And now, obviously, I'm talking about this early, right? Because, you know, who knows? Tomorrow we could pop back above, you know, the TCI could flip green again. We could soon reclaim the 20-week. We could reclaim the short-term holder cost basis. And all this goes out the window. But these are critical things that, in my opinion, we need to watch. We need to watch the 20-week, see if we can get back above it. We need to watch the TCI, see if we can flip green. Watch the MBI, see if we can flip green on that again. If all those things start lining up, then I think flipping back to a bullish bias makes total sense. But right now, I think kind of pulling back on the reins a little bit, being a little bit more cautious might be prudent. Now again, none of this is financial advice. You should make your own decisions, interpret this data the way that you think makes the most sense. You might have a different conclusion from me. That's fine. I'd actually love to hear it in the comments if you're interpreting this data differently. But this is just something that I'm seeing that I wanted to share in my interpretation of this data. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the TCI and the MBI, we're all going to make it.